Oh, welcome back, investors, to Ticker Time News. I am Adam. Thank you for joining me for the After Hours show. Wow, we've got a lot to talk about. Inflation is hot. And quite frankly, we don't need a report to tell us that inflation is bad. Much higher than the Fed wants it to be, much higher than central banks think it should be. Wow, the reading that came in, it is incredible. And, we know it. Like I said, we don't need a report to tell us that inflation is high. We go to the grocery store, the gas station, we try to buy a new pair of socks, and everything is going up. Now, the stock market, well, that's not going up. That went down today, but there were a few key highlights, a few companies that did impress. Tesla bounced today. It got underneath 900, under $1,000, I think $988, somewhere around there, but it bounced from that. So we're going to look at that. Bitcoin is actually coming down right now. Surprisingly, it ran up to a new all-time high of $69,000 even across the board there. But it is pulling back right now. So we've got a lot to look at. But remember, the most important thing that I do want to talk about is what's on your mind. So if you have a question, leave the ticker symbol in your question in the comments, and we will go over it live during the show. So please make sure to do that. First comment right here. Yeah, is the sky falling? I don't think the sky is falling quite yet, but it looks like it could be. When I run through the numbers here, the indexes themselves down 0.5%, almost 1%. NASDAQ was the worst. Gold is actually doing pretty good. It was up 1.13% today. That's a pretty big jump for gold. It usually moves just a fraction of a percent. But yeah, grab some Tesla, lost money everywhere else. I'm glad you were able to buy the dip on Tesla. That is definitely a shining star in the sea of red today. All right, let's jump right into it. I'm going to go through my opening monologue. I'm going to talk about inflation. And then I've got a few stocks I want to look at, some earnings that came out. SoFi did good, and that stock popped in after hours. I got Affirm, Beyond Meat. I got Fiverr. Disney reported, a whole bunch of companies to look at. So let's just go ahead and get started. So stocks did drift lower today after fresh CPI data showed inflation jumped more than expected to 6.2% in October and marked the highest reading since 1990, even 1990. That's the highest inflation has been since then. Rising concerns that price pressures will weigh on the economy for much longer than expected. You know the word the Fed likes to use, transitory. Well, it's not transitory right now. Maybe someday it will, but it is extended and it's staying longer. Traders also try to assess how surprisingly high inflation could impact the Fed's rate hike plans, although policymakers continue to reiterate such price pressures are transitory. Oh my goodness. So the Dow Jones, it shed about 0.7%. The S&P 500 lost about 0.8%, but the NASDAQ was the biggest one. It dropped 1.7%. Now on the corporate front, Tesla stock bounced after falling 12% yesterday. So that was a good bounce for Tesla. Meanwhile, energy stocks fell on lower oil prices. Right now, a barrel of oil is about $81.30. It was down about 3.3% today. That was a pretty big move for oil. Also, the technology sector, shares like Apple and Microsoft were dragged down by higher yields. Still, the third quarter earnings season is in its final stretch. Among the companies that have released results of the S&P 500, a total of 81% reported better than expected. So 81%, that's a majority, folks. All right, let's talk about inflation. The annual inflation rate in the US surged to 2.6% in October, like I just mentioned, the highest since 1990, and that was in November of 1990, and well above forecast of the 5.8%. Upward pressure was broad-based, with energy costs recording the biggest gain, 30% versus 24.8% in September, namely gasoline prices. That was up 49.6%. Inflation also increased for shelter, 3.5% versus 3.2%. Food, 5.3% versus 4.6%. The highest since January of 2009. We are paying January 2009 prices for food right now today, namely household food. Like you want to go and make some sloppy joes or buy some French fries, 5.4% versus 4.5%. New vehicles, 9.8% versus 8.7%. Used cars and trucks, oh my goodness, guys, 26.4% versus 24.4%. Transportation services, 4.5% versus the 4.4%. Apparel, 4.3% versus 3.4%. And medical care services, 1.7% versus the 0.9%. The monthly rate increased from 0.9%, or I'm sorry, to 0.9% from 0.4% in September. That's a month-over-month gain, 0.9%. You want to know what the annual rate is? We'll take 0.9% and times that by 12. Also higher than forecast of 0.6%. So they were expecting 0.6% and we got way, way higher. Now, the 0.9%, it was boosted by, like I said earlier, by higher cost of energy, shelter, food, used cars and trucks, and new vehicles. So things are expensive, and we know this. Like I said at the beginning, we don't need a report to tell us that inflation is hot right now. The question is this peak inflation? Was last month's inflation peak inflation? Or is it still going to rise? Well, when we go out, buy our groceries for the week, the cost is going up. The shopping cart is getting less full, but the cost of those goods are going up still. So we may not have seen peak inflation yet. And that's what I'm looking for. I want to see inflation peak. Maybe it holds steady and then starts a decline. I don't want to see inflation continue racking up month over month over month. November, December, January. I don't want to see that because that hurts everyone. Every single person gets hurt by higher inflation. It's a hidden tax, and we know that. So all I can say is that we just got to budget our money really well during these high inflation times. Now, let's hop over and look at Bitcoin right quick, because I want to show you how it has been coming down. While I pull this up here, let's see, Arkamoto, FUV, three-wheeled EV. Yep, I've seen the Arkamoto before. Sandy Moreau endorsed, small but consistently producing vehicles and new ideas, planning for expansion. Okay, yeah, I'll plug that in and take a look at Arkamoto. It's a company I'm familiar with. I do like their product. It is pretty cool and it looks fun to drive. And I think there's definitely a big use case for Arkamotos in urban areas, especially for food delivery like DoorDash. Wow, those things would be wonderful for DoorDash in an urban city. And speaking of DoorDash, they had great earnings as well. But here's Bitcoin. It's at 64,485. It is coming down right now. It's not as low as it was earlier. This is the daily chart. So if we look at the last candle here on the right, the red candle, The low for this was 62,800. So it has bounced back up a little bit from that low. So it's at 64,005. Now, the high on today's candle is 69,000 even. That was a new all-time high for Bitcoin. Now, what I'm watching here is there is price support for Bitcoin. It's right here at $63,775. If Bitcoin can close above that price, then I think it's still looking good. I am a bit shocked, though, to see high inflation and Bitcoin pulling back so much. Was that profit taking from a new all-time high? I don't know, but I do find it interesting. Inflation is hot. Bitcoin fell after reaching an all-time high today. So I'm just watching this kind of closely to see what happens. It's holding right now at 64,500 and 64,491 right now. So it's kind of bouncing around in that area, which is good. Again, if it can close above 63,775, that would be a good sign for me. They do have a trend line support here, which has held up really well in the past. And if we go and line that up for today's candle, that low would be right at the 21-day moving average at 62,130. And when Bitcoin dropped, it didn't get quite that low, but it came within about $600 or $700 from that point when it bounced at 62,800. All right, so just keep that kind of number in mind, between 62,000, call it 500, to 63,500. That should be a good area of support for Bitcoin to bounce from if it does come down later. All right, let's look at Ethereum real quick. Ethereum set a new all-time high today as well. Let's let that load there. All right, on the chart here, the new all-time high for Ethereum is 4,867 and 81 cents. Now, it's not moving as much as Bitcoin is right now. It's at $45,090 right now. The candle wick, when it came down to a low of $4,460, which is just above its 21-day moving average, which is sitting right about 43.71. And again, there is a trend line support here if it does continue to fall, and that is at 42.90 right now. I don't expect them to fall. If they do come down any more this evening, I would suspect that they do bounce off the 21-day moving average. That's what they have done for a month and a half now, both Bitcoin and Ethereum. They're using the 21-day moving average as their support line as they consolidate and build up more momentum to take another leg up and so forth. So keep an eye on those two. Keep an eye on that. Again, this is just a simple 21-day moving average. They're both using as support. All right, let's hop over to Arkamoto. I typed in fun instead of FUV. That's their ticker. Look at them sitting right there on their 50-day moving average. They were brought down today like most everything else. They were down 3.8%, down to 0.1% in after hours. They've been pretty flat since the middle of August after an earnings report that dropped them down. But this past earnings report, they had a loss of 19 cents on EPS, which was a 5% surprise or a beat, and they had revenue of $2 million, which beat by 6.6%. So nice earnings there for them. I want to look at that profit margin for them if we have one here. Let's go to quarterly, and let me look at this income statement. Okay. Still at a net loss. Revenue, it built up nicely in Q1, but in Q2, it fell back a little bit. I do think they have a fun product. I think they have a product that is unique and can be used in a lot of different settings. Now, it looks here like their balance sheet has been improving. Their assets have been going up, and that's probably due to manufacturing, getting more of the vehicles, the low-fund vehicles out. If I look at the cash flow here, their burn rate, let's see here. Looks like they're using a pretty steady 5.5 million in operating for the past 3 quarters. Last quarter, Q2 21, it went up to 8 million. So I guess just ramping up there to get their products out to the market. Now, if I look at this future-wise, what do we have here? Why does it show earnings 145 days out? Let's go here. So if you want to find information about a company and you're doing your deep dive, here's what the Arkamotos look like. They're an awesome vehicle. See there how the back can be turned into a delivery place to hold orders, or you've got a 2-seater like this. Really cool. Fire and rescue could use these. Oh man, there's so many things that this could be used for. But when you're doing your research on company, building your investment thesis, go look at, usually at the bottom of publicly traded companies, you'll find an investor tab, and you can look for all kinds of information, their presentation, the investor presentation. You can find the latest press releases and news, what they've been up to, what they're producing. So I'm just going to go over here to press release, and they should have usually there's a here we go. Okay, let me go over here. Earnings are next. Earnings on Monday. K8 on November 8th. K8 on October 13th. Statement. Okay. Well, I don't want to dive into any of the reports. Usually they have in their press release, it looks like their earnings already occurred. When you go to the press release here, usually they announce when their earnings are, and they also announce their earnings. So I have one here, Q3 21, and this was on October 13th. Oh, no worries. That's what we're here for, to help each other. Okay, so Q3, this was their earnings right here, their statement. So the highlights are usually what they put at the top of this stuff. So they have record vehicle deliveries. Arkamoto sold through a record 64 customer vehicles, produced a total of 78 vehicles. Final production numbers will be reported in Arkamoto's Q3 SEC filing. Loan applications, let's see, Project Prism. Arkamoto made significant progress on defining cost down programs for all subsystems. Okay. Rental and rideshare. Q3 was the first full quarter of Arkamoto owned rental operations in both San Diego and Eugene, and Arkamoto continues to gather useful data to optimize the rental model. Yeah, I think they can definitely make some revenue from rentals. Those things would be great, especially in beach areas. West Coast doors. First production doors have been installed on the FUV of an early evergreen customer, with more installations scheduled for Q4 and beyond. Arkamoto flatbed. First pilot vehicle were very well received after use in the field with local Eugene businesses. Yeah. Let's see. The ride of the Arkanauts. Arkanauts. That's funny. Announced new ongoing roadshow designed to introduce the Arkamoto family of right-sized EVs to the world. Okay, that's interesting. All right, so they got some fun little projects there. And then if you go down, you can find their more news and stuff there. All right, so you go down, you can find more information here. The photos, yep. We don't really need to look at that. Okay, cool. Let's see. They're talking about a $2,000 model. Appreciate it. Thanks. You're welcome. Yeah, I like diving into these. Okay. Well, I'll hop on. Hop on over here. Okay. A couple earnings that I did want to talk about here. It looks like that for Arkamoto, the earnings here. Let the let it load. The earnings that were released right here, October 12th. It looks like was their Q3 report. They reported a 19-cent loss, which was better than expected by a penny, and $2 million in revenue. That's pretty good. Now on the stock chart here, this is the daily view. Like most of the EV sector, we had a big blast off anomaly, is what I'm calling them now. Back here at the beginning of the year, January, February, where things just got totally overvalued, came back down to earth, and it's been pretty flat and range bound. We're up to a high of like maybe $13 and down to a low of about $10. So this is a $3 move right here. So it's not really moving a whole lot, but it is promising to see that they are above their 50-day moving average, and that wick came down and touched that 21-day moving average. So this is a positive sign, at least on technical for them, even though they were down 3.8 today. So yeah, so that's Arkamoto. Now, since we're on the EV topic, let's just go to Tesla. Tesla was up today. Ticker symbol is TSLA. I use TradingView for all of my stock charts. There's a link in the description below. You can check it out. They have a free account you can use. Tesla was up 4.3%. They came down here and hung above their 21-day moving average yesterday. But today they opened up a little bit different off of that. Now, if we go to a 1-hour chart here, we can get a better look at how it was this morning. All right. So each candle represents an hour. So this morning, we opened up at, let's see, $1,010 is what Tesla opened up at today. And it got down as low as, I guess this morning's candle would be the lowest, and that was $987. And then it ran up real nice in the morning. I mean, it bounced really good. Came down just a little bit more. It got to a low of $1,012 right here, and then it rallied into the close. It was up 4.3%. It's flat in after hours. Now, when you're looking at the 1 hour chart, it is below this 21-day moving average and well below the 50-day moving average. To me, on a 1 hour chart, that doesn't mean a whole lot. It's the daily chart that those moving averages actually mean something. So let's go back to the daily chart for Tesla. All right. So it is just below. It did come down just below that 21-day moving average, but it had closed well above it. And if I measure from that 21-day moving average to where it closed at, so we can get a sense of it, it's about 4.2% above that 21-day moving average. So that's a very positive sign for Tesla. A real nice bounce today. When you look and see that the market was down, it's good to see that bounce on Tesla there. All right, let's talk about another EV, okay? A very special one. Today was a very special day. I'm sure you know who I'm talking about. Rivian. Ticker symbol RIVN. Let me know if you got in on the IPO or if you bought some shares after they came down a little bit, or if you just left it alone. All right, so the daily chart, we can't see much. It's just one big old candle with a big old wick on it. So let me go to the 1 hour chart. Actually, you know what? Let's go deeper. Let's go down here to the 5-minute chart. All right, here we go. This was Rivian today. They opened strong. All right, they opened really strong. They closed out the day at $100.73, and in after hours they are up 2.45% to $103.20. That's where they sit right now. So you can see they closed right here, but it is sitting a few dollars higher than that. And let me just come in here. Right here is where they closed at. Change that to a different color. Okay. So that level right there, that's where they're at right now in after hours. So they've come up some. So Rivian, they opened for trading at $106.75 after the IPO was priced at $78 last night. So after we ended the live stream last night, it wasn't that long after that Rivian came out and said that they were going to open at $78 per share. And that itself was above the original expected range of $72 to $74. Early indicators today were that the IPO could go as high as $125 per share, but of course it didn't go that high. It settled down just a bit. So Rivian stock rose to a high, and we can come over here and look at this. It would be in this morning candle up here. They got as high as $119.45, and that was their intraday high. So Rivian, electric vehicle maker, they raised about $12 billion in their IPO, and they are valued at just over $90 billion. For context, okay? Tesla, give me one quick second. Excuse me. All right, there we go. All right, so for context, Tesla first crossed over the $100 billion market cap in January of 2020. Yeah, in January of 2020, after going public in 2010. So it took Tesla 10 years of being a public company to reach $100 billion as a market cap, right? That's crazy. The Rivian IPO is ranked as the 7th largest in U.S. history. That's amazing. In the auto sector, the market cap of Rivian places it above EV startups like NIO or Lucid Group, right? And as well as legacy players like Ford and General Motors. And this morning, watching some mainstream media talk about this, GM's CEO came on, and this is just kind of a side note, Mary Barra. And when she was on TV this morning, she was making the case that Rivian's interest, right, the excitement for Rivian, shows that GM shares are undervalued. I couldn't help but laugh at that. So she believes that GM shares are undervalued. LOL, right? Let me just put GM up here right quick so you can see their lovely market cap and their stock. They were actually green today, up 1.1%. But their market cap is $86 billion right now. So that's incredible. I thought that was funny when she said that. Now, their stock is kind of getting trapped here between their 21-day moving average. Their 200-day moving average is just below that. 50-day moving average is up top as resistance. So they're kind of getting trapped here to move sideways. But they've had a little run. Ford has actually performed better than GM, at least stock-wise. And I think a lot of that has to do with Ford owning a bunch of shares in Rivian, right? GM doesn't own any shares in Rivian, but Amazon and Ford both did. So anyway, back to Tesla for a moment. Sorry I got sidetracked. I just thought that was something funny for her. But let me put Rivian back up. RIVN is the official ticker symbol for Rivian. But now, of course, Tesla is at the top, though, when it comes to market cap for these different companies in the automotive industry. And I know Tesla isn't really an automotive company, but they do build electric vehicles. So it's worth noting that, right? So their market cap is $1 trillion. Just for perspective there, Elon Musk's company isn't really friendly with Rivian, at least publicly, as the two are involved in a lawsuit over trade secrets. Now, Rivian CEO did come out on television this morning and say that their company has not stolen a thing from Tesla. So I thought that was interesting. But like I mentioned, Amazon and Ford are both reported to own double-digit stakes in the, I think, Class A stock for Rivian. And shares of Ford, they're up more than 40% since Rivian filed for its IPO. So this is a windfall for Ford as far as getting some cash return on their investment, and also for Amazon. So with this, it could be partially tied. Ford's rise could be partially tied to the value, and I think they have about 102 million shares now of Rivian. Now, I know some may be asking, we've got Lucid, we've got Tesla, we've got NIO, we've got, other failed or hurting EV startups like Lordstown Motors. Workhorse is struggling, and then you've got the fake EV rolling down a hill. I forget that, Nikola. But anyways, some are probably wondering, so what's the big deal with Rivian? It's just another electric vehicle company. Who cares? Well, listen to this idea for a moment. Why the big focus on Rivian from investors? Well, the company has plans to bring a pickup truck, a SUV, and a commercial delivery van to the market. All electric, all three styles. Of note, Amazon already announced an order for 100,000 of their electric vans, which could be just a starting point for Amazon to build out a fleet of electric delivery vans. Rivian is offering extremely high quality and capable vehicles, has a good leadership team and powerful backers, and is very well funded and has significant production capacity. So investing in Rivian, it makes more sense though as a 5 or decade longer type of investment as the entire world transitions to electric vehicles. And that transition to electric vehicles in the US alone, what's the number one selling vehicle? A Ford F-150 pickup truck. Rivian's pickup truck, it's not a full-size pickup truck. It's more like a, if we want to compare it to a Ford vehicle, it wouldn't be a Ford F-150, but it would be a Ford Ranger. That may be more comparable, right? But that doesn't mean they can't build a full-size truck if they want. Or heck, does that even mean America wants a full-size truck? Maybe a smaller electric truck will do good. Yeah, a Toyota Tacoma. Perfect. Yeah, exactly. So that's what I think is, or why there's so much excitement for Rivian. Number one selling vehicle in America, trucks. They're building the electric truck. They're first to market, first mover advantage. They're producing electric pickup trucks before Ford, before GM, even before Tesla. Even though the Cybertruck is kind of wicked and far out there, I don't know if it's going to be a bestseller. Rivian has a more traditional pickup truck look to it. And it's got some cool accessories, I must say. That pull-out camping equipment and like pull-out kitchen from it, that is pretty cool. So they've got some neat tricks and toys. They've got their tank turn. So some pretty amazing things that Rivian's vehicles offer. For me, I'd be excited for their SUV. I like SUVs. So, but anyways, that's what I think the excitement is for Rivian, and why they're priced and valued so much is because they're going after the largest market in the US with the electric version of it. So what do you think? Do you like Rivian? Do you think they have a high quality product? Do you think their truck being more traditionally shaped or looks that they're offering will be more appealing to customers? I think so. But I'd like to hear from you. What do you think about it? Do you think Rivian actually has a place in this market? And remember, when automobiles first came on the market, there were some 100 different manufacturers. So not every EV manufacturer is going to make it to the end. A handful of them will, and there'll probably be some niche ones like the Arkamoto that find a category where it can fit in, right? I think Rivian has a place and it can be one of the top. Of course, Tesla, they're in a league of their own. Tesla is just way, 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 way ahead of the pack. But as far as selling pickup trucks go, I think Rivian has a good shot at being one of the top electric vehicle manufacturers. And, thinking about this, I haven't even really thought about their plans to go global. What happens when they get to Europe? What happens when they get to India? Europe could be a really big market for Rivian. So, yeah, I know they're looking to build another plant. They have a plant in Illinois. They're looking for another plant to build in the States, maybe Texas. And they are looking for a place to build a manufacturing facility in Europe. So I'm excited about Rivian. I hope you are too. Hope I didn't take too much time talking about them there, but I'm on board with Rivian. Yeah, the stock is expensive. I think the valuation could come down a little bit, but I did nibble on some Rivian shares today. I did a trade this morning when it ran up, and then, of course, when it pulled back. These two big candles right here, this is when I did a trade this morning with them. But I did buy some while it was coming down under $100. Just nibble. I didn't open a full position. I do think there's some hype involved, and I think it could chill and come down a little bit after that hype kind of fades away a little bit. And remember too, when it's IPOing like this, it has peak media. So if we go to something like, let's go to a Google Trends real quick. I didn't plan to do this, but let's just do it real quick anyways. This is a way that you can judge momentum. I mean, you can do it for anything. You can do it for products. You can do it for stocks. So I'm just going to type in here Rivian. And I'm going to click on the automaker. And this is going to show you the interest or what people are searching for. So when we look at this, this is over a 12-month period, right? So over the past year, there's been searches for Rivian, right? There's been a couple of peaks, but nothing really big until today. And it's all the way up here, right? I mean, look at this. It's like Tesla's stock chart before the fall yesterday and the bounce today. So this is peak media for Rivian. This is the most momentum the company has had with the public since it's in history for Rivian. This is the most attention they have gotten. So this is just a way you can check too. You know, if, for example, we go and look at somebody else who's fallen out of favor, let me, what about if I put a Redfin on here and we can see how the housing market is doing, right? So I put Redfin on here as well. It's the red line. Well, it really hasn't moved. Let me get Rivian out of there. Maybe we can get a better view. All right. So for Redfin, over the past year, it peaked right here. And this was in April, right? And if we go and look at the stock chart for Redfin, RDFN is a ticker symbol. Let's see if they peaked in April. Let's go to the one-day chart. And let's see, did their stock peak in April? Let's see, their stock right here. Well, this was February. If we go find April on the chart, it would be right here, which there was a little peak. This was right before earnings, and they had bad earnings right there. So we come back here and look. This was towards the end of April when they had that peak. So this is just a way that another data set that you can use when you're doing your deep dives or looking at building an investment thesis on a company. So just some extra tools there that you can use. Okay, so Rivian peak media. The hype may cool down over the next couple of weeks, which could bring the stock down a little bit and provide a better buying opportunity. Okay, now there are two other stocks that had massive moves, and we talked about it in Sunday's Catalyst Watch video. Make sure you watch that every Sunday evening. The Catalyst Watch video comes out. It tells you what I'm watching, why I'm watching, and what to watch for on different stocks. Roblox. I think it's going to be a big company for the metaverse. Ticker symbol is RBLX for Roblox. Let that load here for a moment. Open this chart back up. So they were down 13% today. So this big move, right? and then down, but they're still way up, right? So Roblox and then Trade Desk also had a big move yesterday. Ticker symbol is TTD, the Trade Desk. Another big move for 2 days in a row, and then people taking profits, okay? So those are two companies that I just wanted to point out. They had big moves, and then they both came back down a little bit today, as I would imagine people are taking some profits, right? Okay, let's talk about Palantir for a quick moment. Ticker symbol PLTR. Now, Palantir had earnings yesterday, right? Investors, I think, missed it. And then again today, it's down 7.1%. I think this is a buy the dip opportunity. It was down over 9% yesterday, sinking like a stone today with being down 7%. And they had decent earnings. So either investors are totally missing what happened and selling because they're letting their emotion take over. I see red. Oh no, I need to sell. Or they have stop losses set and they're just being triggered as a stock moves down. Or company employees are selling their compensated stock. Now, Palantir did bounce around the $22 level. So that is a good support and a good sign. Now, there's a price line support right here. It's at about $22.50, right? The stock is just about sitting there. It's a little bit lower than that right now. If it does continue to fall and it does not bounce, the next area that you want to watch for is $21.50. That would be the next area of support. And you can find that support all the way back here in the month of July before it broke out of its symmetrical triangle. Okay. So that would be the next area of support if it continues to fall tomorrow. So just watch that. Okay. Earnings today. SoFi. Oh, SoFi. I love SoFi. Ticker symbol is the company's name, SOFI. Let that load for a second. All right, excuse me there. Got to wet the whistle. Okay. SoFi. It was down 7.77% during regular hours today. However, earnings came out after the closing bell. It's up 11.8% in after hours. It had great earnings. Now, if I open this up a little bit right here, you can see this red candle right here. Again, this represents just one day, just today. So it opened at $21.14. It got as low as $19.85. Buying SoFi under $20 is a great move. Anyone who did that, I applaud you. Good job. Now, the wick right here, it fell below this support level at $20, okay? It does have support at $20, but it's up to $22.83 right now in after hours with that nice bounce. So that looks good on the chart. I think it can stay above this $20 area right here. It might even be able to ride back up to 24, 25, possibly. Now, their Q3 21 EPS of a loss of 5 cents, that beat by 9 cents. And they had revenue of $272 million, which was a 35.5% year-over-year gain, and that beat by $16.38 million. Total year-over-year member growth, 96% to 2.9 million users. That's great. They added 377,000 new members. That's the second highest quarterly increase in company history. So good job, SoFi. Total products. That was up 108% to 4.3 million. Fifth consecutive quarter of year-over-year triple-digit growth. You heard that right. Triple-digit growth. SoFi Money, SoFi Invest, SoFi Credit Card drove 79% of new member growth and 73% of cross-buy. That's when somebody is in SoFi Invest and then they move over to SoFi Credit Card. So they had a really nice quarter. Now, I haven't had an opportunity to dig deeper into it. I will. I also didn't hear anything about a bank charter, but I haven't listened to the call either. Maybe there was some update about that. So I'm going to look for that as well. That news should be coming. A bank charter will send this stock literally to the moon. Okay, another company that had earnings is Opendoor, and I wanted to be cautious with Opendoor. Ticker symbol is open because of their iBuying program. Opendoor flips homes, right? Well, Zillow, they stopped doing their iBuyer program. No more home flipping. They failed. Management failed at flipping homes at Zillow. Opendoor, they succeeded at flipping homes. Opendoor, they were down 7% today, but they're up 17.83% in after hours, folks. They did a great job. Now, let me show you where they're at so it's clear to see. They were down here. You can see this red area here, right? They are now sitting right up here. This is how far they jumped. That's a 17% jump right there. That's where the stock is at right now in after hours. A big bounce all the way up here. Now, it did slow down when it reached its 21-day moving average, because over the past week, it has fallen that far. And yesterday, it was using its 50-day moving average as support. I didn't think it was going to come down much further, especially since the 200-day moving average wasn't that far below it, but it did. But then earnings, they turned it around. So they reported their Q3 21 EPS of a loss of 9 cents, which beat estimates by 8 cents. They had revenue of 2.27 billion, and get this, folks, they were up 570% year over year. That's their gain over the past year on revenue. That beat by 260 million. Adjusted net income of a loss of 17 million versus a 2 million in Q2 of 21. They expanded to 44 markets at the end of Q3 21 with 5 new market launches. This is the amount of homes that they purchased this quarter, was 15,181 homes. That's up 79% versus Q2 21. They grew their inventory balance by 17,164 homes, representing $6.3 billion in value, up 130% versus Q2 2021. Outlook for Q4 21, revenue guidance of 3.1 billion to 3.2 billion versus an estimate of 2.92 billion. So they're looking good. They're projecting good guidance. Investors who held on got rewarded. So Opendoor was able to manage flipping homes much, much better than Zillow could. All right, let's move on to another company that reported earnings that a bunch of people are talking about. There's a lot of hype about it. That's Affirm, ticker symbol AFRM. All right. What is this? TTCF tanked after delaying earnings. They need time to double check it or something. Is a delay always bad? It's odd. but it doesn't mean it's always bad. So let me pull them up on the chart here. TTCF. Sometimes information can be sent to the wrong person, or somebody, especially in the era of COVID, somebody could have gotten sick, couldn't sign certain documents, so they couldn't release it to the public, because they do have to be fair and release things all at once. So yeah, they were down 3% today, down 4.8% in after hours. And quite frankly, with Tattooed Chef, I'm not sure if how big the market could really be for them. I'm just checking the news here to see if there's anything being reported on them. Okay. Nothing reported. Nothing in the news here for any problems that might be happening. Now, let's see here. They do have an EPS estimate of a loss of 6 cents. And wow, that's a big improvement from last year. Last year, they lost $376.68 a share a year ago. The estimate is for revenue 63.9 million, which would be a 56% year-over-year gain. The company recently bought Belmont Confections for 18 million in cash and stock. Over the last 3 months, EPS estimates have seen 0 upward revisions, 2 downward revisions, though. That's one data point of concern. Revenue estimates have seen 1 upward revision, 1 downward revision. That's fine. They equal each other out. Okay. I don't see anything in the news pointing to anything negative, so it could just be that they aren't, they don't have, they weren't able to get their paperwork in on time, possibly. Let's see here. A YouTuber is always talking about it, but it hasn't gone anywhere. Getting curious as it gets cheap again. Yeah, I'm just not sure how big the market really is for it. I mean, right now, technicals indicate a sell. And all right, so all right, here, let's do this. Someone else had their earnings today, right? Beyond Meat. I am not a big fan of Beyond Meat. I don't think that I just don't know about the market size and how many people are really interested in, you know, plant-based meat like that. But I know there's a market for it. It's a niche market, right? Well, if we go and look at what Beyond Meat did, because that's a close. That would be an example of somebody kind of close. See, remember Smile Direct Club, how I got that warning? Well, I get that warning for Beyond Meat as well. Right now, it has Beyond Meat has an F for valuation. It does have an A- for growth. Profitability, a D-, momentum, a D-, revisions, a C. So that doesn't look too good. Now, Beyond Meat they missed estimates by 48 cents today. They did beat on revenue by 12%. So they came in at a loss of 87 cents, which missed by 48. Revenue of 106.4 million, which was the 12% year-over-year gain, and that beat by $330,000. And the CEO came out and was kind of pumping up the company. Things are looking bright for us, especially in 2022. We're not going to do so good the rest of the year, but we're going to do great in 2022. You know, that type of a speech that they were given. So I'm not a huge fan. I think the market might be smaller than anticipated, maybe. But I don't know. I don't have that warning for Tattooed Chef. Oh, yes, I do. Oh, yes, I do. Tattooed Chef, valuation in F, growth A plus, of course, profitability D minus, momentum D, revisions, and revisions are important because every time a company comes out and makes a public statement, we're going to do $1 million this next quarter. And then they come out in 2 weeks and say, well, maybe we're going to do 500,000 in the next quarter. And then they come out and say, well, we might get to 100,000 this next quarter. Those are revisions, right? And each time it was getting worse and worse and worse. So Tattooed Chef has an F for revisions. The quant rating system has very bearish. And I'm getting the same warning here as I did for Smile Direct Club. And remember how Smile Direct Club went. So both Beyond Meat and Tattooed Chef both have a warning and a risk of performing badly. And then it can go into detail, but the general rule here is the grades that I gave you, most of them are red with F's and D's. Beyond Meat is a little bit better than Tattooed Chef because it at least has a C on revisions, where Tattooed Chef has an F on revisions. So proceed with caution with Tattooed Chef. However, like I said, when they do delay their earnings, it doesn't necessarily mean something bad is happening. It could just mean paperwork got tripped up and didn't get to the right person, didn't get signed in time, blah, blah, blah. So I think you get it. I think you understand. So just be careful with that. Let's see, Tattooed Chef, they are under their 21-day moving average. So that is a bearish sign. And if we're looking for areas of support, it's getting close because you see these 3 big dips right here, right? Well, if I line this up and try to find a common area here, it looks like $16 would be on the high side. And then on the low side, we'd probably come down to $15.25. That right there could be an area where the stock could bounce. And it's not there yet. And after hours, it puts it close. It's at $16.40. So another 40 cents, and it's going to be in this, looks like a possible area of support. Yes, they were. You had a dip right here. It looks like a dip right on earnings. All right, let's see here. There we go. If we do this, right? Why, right? All right, I'm putting these lines every time there were earnings, okay? And we'll start to see the pattern a little more clearly. There wasn't really much to report on that one. All right, so there's our lines for earnings. So you can see, if we go to the first one, we had a rally after earnings. The second one, it dipped after earnings, and then we had the rally. Earnings, rally, and then a slow bleed out. Earnings, rally, and then a bleed out. Last earnings, it gapped down. It fell to the support area and then rallied. So if we're looking for a pattern, you could potentially say it's gonna fall, and it could fall into this potential area of support here. Earnings come out, it's potential it falls a little more, or it could bounce. It just depends on what earnings are for them. But I'd be cautious when they're revising down. That means they're not doing as good as they have reported that they're doing. So just be careful with them. That's Tattooed Chef, ticker symbol TTCF. Okay, let's talk about anyone else. Yeah, I can see it. Absolutely. I'll be careful a tiny bit. Sure. No worries. Yeah, it could bounce, but you have to watch earnings and see. I know Tattooed Chef does get talked a lot on YouTube. I don't talk about it that much. But yeah, take care, use caution. Let's see here. Disney did report, and they also have Disney Plus Day on Friday. That could be a good mover for the stock. Now, let me talk about Disney real quick. I like the company. I think it's one that has a lot more room to go. All right, it was down today, and you can see here it's been range bound and flat all summer long. It was flat during the day, but it was down 4.3% in after hours. Now, it was soft on subscriber growth, but that's something that I've been talking about to help prepare us for it, because the CEO, whenever they make public comments, it's good to pay attention to, because he said exactly what was going to happen. But anyways, Disney reported their fiscal year Q4. So this was Disney's year-end quarter. They had an EPS of 37 cents, and that missed by 13 cents. So that means it's costing Disney more right now to produce a dollar. They had revenue of $18.5 billion. That was a 26% year-over-year gain, and that missed slightly by $240 million. Now, like I've said, Disney Plus subscriber numbers would slow or soften because the CEO made public comments this summer saying so. However, Disney Plus reported 118.1 million subscribers, up 2.1 million, and up 60% year over year, but substantially missing expectations of 125 million subscribers. ESPN Plus, their subs also grew 66% year over year to 17.1 million. And Hulu subs or subscribers rose 20% to 43.8 million. Now, Hulu's video on demand only, because they have two products, video on demand, and then they have live TV with video on demand. So their video on demand was up 22% to 39.7 million, while their live TV plus video on demand dropped to 4 million from 4.1 million. For Disney, the whole company, cash from operations rose 58% to 2.63 billion, and free cash flow rose 62% to $1.52 billion. Average monthly revenue per paid subscriber fell again for another quarter for Disney Plus to $4.12 from $4.52. You want to see that number tick up. That would be people purchasing Disney Plus and then also purchasing those premium movies that Disney offers within Disney Plus. For ESPN Plus, it rose 4% to 4.74 million from 4.5 million. For Hulu and their video on demand, it ticked up to 12.7 million from 12.5 million. And for Hulu's live TV plus video on demand, it rose 18% to 84.8 billion. All right, so that's Disney's numbers. I haven't had time to dig into them more than just the surface level there. But I think the company is doing all right. Their next quarter, they're having more TV shows, more movies in the theater, and it's just going to be an up as far as revenue. We're heading into colder months, so they'll see less activity in their parks, which is typical. So maybe their expectations won't be as much for them. Okay, another company. Oh, and don't forget, Disney Plus Day is on Friday. It's their first ever Disney Plus Day. They're going to offer a lot of sneak peeks for shows and movies, and we'll probably get some new information about the IMAX integration with Disney Plus. I think that's going to be a big deal for Disney, especially with people staying home to watch movies and not going to the movie theater. So that's coming up on Friday. Last investor day for Disney, I do believe the stock ran up 12% during that event. So it is something that can move the stock. So pay attention to that on Friday. All right, another hot company that I want to talk about is Upstart. All right, and their Upstart is down. Ticker symbol UPST, and we'll load up Upstart here. They're down 18.2%, and I actually think this is good. I think this 18% drop is good for Upstart because they ran up pretty quick, right? There was a lot of hype and a lot of talk about Upstart and being the next big thing, and it ran up really fast. This is a good buy the dip opportunity. So Upstart, it's down. It was down about 20%. It ended up being down 18.2% for the day, despite reporting another beat and raise. That's right. They beat their earnings and they raised their forecast. So there is more upside to this company. The company nearly doubled EPS, or earnings per share, and grew its revenue by 250%, beating estimates by 7%. The company beat sales estimates by 23% in Q2, but only 4% in Q1. Clearly, the stock got ahead of itself and expectations were too high, because this was another fantastic report in my view. Management noted that the underlying AI lending models don't improve linearly, anyways, in a straight line, and that a focus during the quarter was preventing an increase in fraudulent loan applications, which didn't have a material impact financially. At least that's what management says. Management announced plans to eventually or methodically enter the market for small dollar consumer loans. Maybe buy now, pay later, right? But smaller loans. Also, small business loans. That would be a fantastic market. A little riskier, most businesses don't make it, but still. And mortgage loans. That is huge. You know how big the mortgage market is? By Upstart offering mortgages, maybe they could partner with another fintech company that's in the real estate space. I don't know, Redfin. You pick. It could work. But anyways, I think that's a really big deal for Upstart to get into mortgages. Also, recall the stock broke out to a new high after a blowout Q2 result in August. And you can see that on the chart right here. Let me put that vertical line up. That kind of helps us to see these earnings related moves. So here, this purple line, that's when earnings were for Upstart. That started their big rally. Then they had a symmetrical triangle, blew out of that, and then reached new all-time highs, and then fell back into the trading channel. I thought everything was okay. And then I think there's an overreaction here with earnings and it dropping so far today. You could see a nice bounce in Upstart, at least back to its trading channel, right? I think it could. But anyways, the stock doubled over the next 2 months. So the risk reward was not ideal when it was up here at all-time highs, right? The 26 billion or 27x forward revenue was quite expensive when it was up at all-time highs. The stock could retest support near that breakout and still look expensive, but I view pullbacks as a buying opportunity for this long-term hold. What do you think about Upstart? Is this a good buying opportunity for you? You go into Walmart and you find a pair of shoes that are, let's call it 20% off. You're going to buy those, or you're going to pay full price? I think you're going to go with the 20% off coupon, right? 20% off code? I think so. All right. So that's what I think about Upstart. Another company that I really, really like, and I think it has a future. It is a bit of a speculative play. It is a bit of a hyper growth type of story. That's Toast. Now, not the toast we eat for breakfast, but the toast that does bring in the cash for those making the toast. So their ticker symbol is TOST. Let that chart load for a moment, and you can see they haven't been public for very long. They just went public earlier in September. But anyways, here they are. They were down 17.6% today. They're under $50 right now. And you can see every time they get down under $50, and I know this isn't a long history for Toast because they haven't been public very long, but whenever they dip below 50, they pop back up. Dip below 50, pop back up. Dip below 50 right now. Will it pop back up tomorrow? That's the thing. So Toast reported a lower than expected earnings before taxes, etc., loss on higher than expected revenue and also they guided for a smaller than expected loss on higher than expected fourth quarter revenue. So it wasn't all doom and gloom. That one little miss there on EPS. Still, it wasn't enough to give the rich valuation and sky-high expectations out the gate. As noted earlier, okay? Yeah, excuse me there for 1 second. As noted earlier, 15% of insiders' vested stock can be sold on Thursday. So watch out for that. That equates to 10.7 million shares that could, I say could, be sold on Thursday. That's tomorrow. So the stock could come down some more. That could be quite a bit of selling pressure on the stock. And what would that do for us investors, especially those who buy the dip like Kathy Wood? You know, Kathy Wood, going off topic here, she bought the dip on Palantir yesterday, over 1 million shares of Palantir. I was very proud to see that. But anyways, back to Toast. With those shares being able to be sold on Thursday, the stock could dip more. Now, I like accumulating this stock when it's under $50 a share. And I think on Thursday, tomorrow, I think we'll see it. Okay. Whew. That wraps up everything that I wanted to talk about today. I know I didn't get to talk about PayPal yesterday. I was going to talk about it today, but I think we're running a bit over on time. We've been out here now for 1 hour and 20 minutes. So I'm going to give you a couple minutes. If there's something on your mind, something you want me to look at, put it in the comments, ticker symbol in question. I'll look at it. No worries. Otherwise, I'm going to wrap this stream up. Again, watch out for Disney on Friday. Watch out for Toast tomorrow. Rivian was a big winner today. It was up nearly 30%. It's at $105 now in after hours. This stock, I think, is going to, at least with today's actions, whenever it gets to $100, $99, $98, it bounces right back up. So that could be a floor building, although we don't have history. This is just one day. This is what happened today for the company. So watch for that if you're interested in Rivian. I think it's a good long-term play. DoorDash, oh man, I wanted to talk about DoorDash too. They were up 11.8%, or 11.58%. They had good earnings. Arrival was up 4.5%, and then most of the others, they're up 4, 3, and 2%. So not a lot of big movers today. If I flip this around to losers, then we'll see quite a few. We got Purple, that's a mattress company, Fubo TV, Upstart. We already talked about Upstart. They had a big fall today, and I think it's a buy the dip. Toast, they dropped today, but again, I think that's a buy the dip. On Thursday, at some point, maybe Friday, watch for higher volumes. That's when you know that people have sold out. Hey, one more thing. That just reminded me of something. I want to go to Tesla real quick and look at this. Let me show you something. I'm spelling out the company instead of the ticker. TSLA. All right. On Tesla, if we look at the volume, right? All right. This is the daily chart. Let me open this up just a little bit. If we look at the volume, which are the candles all the way at the bottom, they're green, red, 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 green, 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 red, green, green, red, red, green, almost like a song. That's the volume candles. When volume is really high, then there's more people trading shares, right? I'm buying your shares, you're selling yours, vice versa. That's what's happening with volume. If we look on November 9th, right, yesterday, there was a humongous red candle. Before that, we have to go back to October 26th to see a candle that big, right? Could it be that Elon Musk has already sold his 10%? You know, that 10% that he said he would sell if Twitter voted that he should. Twitter voted he should. With this high volume on the 9th, could that be Elon Musk selling his shares? And that's why the stock dropped 12%? Because look, folks, if we look at this on the 26th of October, this red volume candle is nearly as big as this one. However, if we look at how the stock moved on that day, it moved to the downside 0.63%. So even though there were big volumes of selling, those big volumes could have been one or two shares, one or two shares, one or two shares. Well, the high volume on November 9th brought the stock down 11.99%. Could that be because Elon Musk sold his shares already? I think there's no evidence, right? But it's interesting to look at and think about, right? All right. Let me know what you think of that theory. Do you think Elon has sold his shares and that's why the stock dropped almost 12% on this volume right here? Or if you look at this volume and the stock barely moved, 0.5%. What do you think? Let me know. Okay. Well, I'll wrap this stream up here. Thank you guys so much for being with me. I greatly appreciate it. That's it, right? We're all good. Everything's good. All right. Have fun investing and trading tomorrow in the market. We'll see if this major inflation warning that's been flashing is going to continue to hurt stocks tomorrow, or will it be a buy the dip opportunity? We'll have to wait and see. And real quick, before I say goodbye, we saw that Bitcoin was falling. Let me just plug Bitcoin in here real quick. If I can do it. There we go. I just want to see if they are still up. Oh, yeah. Okay. All right, good. Bitcoin has actually gone up higher than it was when we started the stream. So that's looking good. Bitcoin's looking good. Crypto's looking good. All right, folks. Thank you guys so much for watching, and I will see you in the next video.